Hey, Wilf, yeah, Senator Joe Manchin's call for the Fed to reverse those emergency policies and stop injecting stimulus into the economy because of inflation comes as the public is showing more concern about rising prices than it is the lack of jobs. The CNBC All-American Economic Survey finding 67% of the public think inflation is a bigger problem than unemployment, compared to 22% who think the other way. Majorities in every single demographic group, if you're young, you're old, Democrat or Republican, they're more worried now about prices than employment. That could be because the job market is improving. Wall Street tomorrow expects blockbuster July job growth of 850,000 and the unemployment rate to hit a pandemic low of 5.7%. That said, some of the signals we watched leading up to the number have been mixed. ADP was much lower than expectations. ISM manufacturing and the service employment indices, they were strong. The two high-frequency data points we follow, Homebase and UKG, both are HR software companies. Their signals have been moderate. Data from the HR software company UKG, which has done a good job of forecasting strength or weakness, suggests it won't be as strong as June, but better than it was in May. We'll be looking also for any impact of labor shortages and, of course, an early sign of whether the Delta variant is hurting job numbers, along with the impact of extra unemployment benefits ending in many states. Wilf, Sarah?
I have a question, Steve. I find it odd that Senator Manchin is weighing in here and sort of criticizing Fed policy and urging them to move when the administration itself has said that inflation is transitory. We've heard that from Treasury Secretary Janet Yellen. What is he up to here? And what do you make of some of the recent Democrat commentary and criticism around Fed Chair Powell? Warren, too.
Sarah, I think if you go outside and go like this and feel the wind is blowing against the Fed from a political standpoint right now. The wind of inflation concerns, we picked it up in our poll. We actually asked this 3 different ways, and in each indication, in the inflation part of the mandate is seen as more important by the public than the employment part of the mandate. I think it's a really interesting moment for Fed policy where maybe they forgot not just the monetary policy reasons to fight inflation, but maybe the political ones as well. People do not like rising prices. And whether you have a job or don't have a job, you still have a concern over rising prices. And I think that's the way the political wind is blowing right now.
So Steve, one answer perhaps for Mr. Manchin might be to replace Jay Powell with Andrew Bailey. I don't know if you saw the news this morning on the Bank of England side, but
I did not.
Quite interesting because, sorry.
Oh, yeah, you mean about the Bank of England being tighter. Yeah, about the bank, yeah.
Yeah, Bank of England, but the thing I was going to just draw from it was twofold. It's a sign of a major central bank that is willing to be preemptive rather than just totally reactive and waiting for the data to come and wait years afterwards. And, to your point, sticking to what its original mandate has been and always has been, as opposed to trying to fudge it to say, actually, we're just really focused on the unemployment side of things today.
Well, I think you have to go back to the financial crisis. Remember, the Fed was roundly and severely criticized for policies that helped out the banks more and the wealthy more. And Powell came in from the very beginning saying, we are going to address the needs of average Americans through our Fed policy. And that led to a policy that has sided more with the employment mandate over the inflation mandate. One thing, it's interesting, it was not a mistake yet. But if in 6 months he's still dealing with inflation, then that will end up being a mistake. And the Fed should well have addressed the change in fiscal policy. That's what I believe the Fed failed to do. It was all fine if the fiscal side didn't do anything or went with the reverse like it did in the financial crisis. This time, fiscal stepped up big. The Fed didn't change. And that's where the mistake may have been.
That's where Senator Joe Manchin should be focused, because they're now debating another $4.5 trillion in spending. Steve, thank you. Steve Leisman.